Hi, for those of you who don't know me, my name is Josh, and I'm part of the Good Brothers Trading Academy. And today's lesson is for beginners, and we're going to discuss the EMAs and how they can be useful. But first, do me a favor. I'm brand new to YouTube. Hit the like button. Don't forget to subscribe to the channel and hit the notification bell so that you can be notified every time we come out with new content. Now, the concept behind the EMA is simple. We want to let time correlate with price, or we want to let time catch up to price. How many times have you been into a bull flag, for example, and you see the flag happening? You're excited, and the EMAs are starting to creep, and they're looking something like this. And you go ahead and take the breakout, and next thing you know, all that happens is we end up getting a false breakout. Now, if you fall victim to this, and most traders do when they first get started, because we're excited to trade, we want to make those, we want to make those gains in the account. We want to see profits going. And what the EMAs are going to do is we can select a certain EMA, and I suggest sticking with one EMA, just like you hear other professionals talking about sticking to the same strategy. It's no different. We have a 9 EMA, which is the pink EMA on the chart, and we have a blue EMA, which is the 50 moving average. And these are the two that I would recommend. First and foremost, the 9 EMA is used often. It's like a self-fulfilling prophecy, okay? So as the stock price moves up, for example, like this, we start putting in a flag pattern, as we often do. Then the 9 EMA goes ahead and we find buyers coming off the 9 EMA, which makes and forces the stock price to rise and go higher, right? Now, imagine if we were to, just like looking at the technical charts, if we were to look and find bull flags or double bottoms or V-shaped recoveries or head and shoulders, we look for those same patterns over and over. Imagine if we were to look for the same patterns to form with the EMAs over and over. We don't trade everything. We don't trade every pullback, and we don't trade over every extended stock, taking it short, expecting a pullback down to the 50-day moving average or the VWAP, whatever indicators you're using. Imagine you waited for the certain technical pattern that you've been practicing, let's call it a flag pattern, and you wait for the EMA to look exactly the way it's supposed to every time. I'm not going to get into certain strategies to play. This is kind of up to you to find for yourself. I'm just wanting to bring some awareness to you. Now, what I do find to be very useful is if you use the same chart patterns, the same time frames with the same indicators, you can start to be profitable in the market. This is also how you begin to scale your position. So let's look, for example, we get a move higher in the market. We get a bullish move up, we get a consolidation period over, and then the 9 EMA is creeping into the top of that. So what we're finding is higher highs continually, right? The stock price is continually moving up higher. The blue EMA, if you notice, is also pointing up. We are not taking a pattern where, let's say we get a consolidation sideways, something like this, with a flag pattern up. Notice how the blue EMA is still horizontal. The 9 EMA might be pushing, but what happens if you took this breakout on a smaller time frame? Well, that's what ended up happening is we get a false breakout, and that's why it continued to sell off, is because there was a lot of buyers in there. What if you were the type of trader that was patient enough to wait for time to catch up the price where we get this strong bullish move up, we get the horizontal pattern sideways, and the EMA is to look the same way. The blue EMA has, for example, it's pointing in the direction you want the stock to go. The 9 EMA is also pointing in the direction the stock that you want the stock to go. And it gets all the way to the end of the flag pattern before the 9 EMA squeezes it, right? It squeezes it and only has one way to go, and that is up at that time. And you're going to find that other buyers also come into the same area using the flag pattern on the technicals. Now let's erase it. This is the other thing we can go for. If we get the strong move up and it's overextended, the stock is overextended, all we're doing is waiting for a pullback to form to the 9 EMA. So in this instance, we'd be calling it, we're letting time catch up to price. So as you're watching the EMA form, by the time it's peaked out all the way to here, chances are this 9 EMA is barely right here in the charts. So we have to let it continue to go sideways, build energy sideways to let time catch up the price in order to get this move higher. Okay? And same thing with when we can start following it over. Now, there's multiple ways to use the EMA. Again, using the 9 EMA and the 50 EMA is what I would recommend. It's what many other traders use. And as we're going sideways in the market, you can kind of start to see that the blue EMA starts to kind of base out. Once we get underneath the EMAs, it's bearish. Once we're over the top of the EMAs, it's bullish, right? And so we don't want to start taking long positions. Imagine taking this flag pattern where we get a move up higher with a consolidation sideways, expecting the breakout to happen, but we're still on a downtrend. So how would we play this? What we want to wait for is we want to wait for the EMAs to base out. For example, we want to wait for the EMAs to be coming down, like so, and then we want it to find a bottom. And we want the EMA to start to find a bottom, and then we want to start seeing it make a move higher. In the process of it making a move higher, we want the stock price to start bouncing on the EMA. We want it to start making higher highs. If it's underneath the EMA, it will continue to get rejected by the EMA, and the EMA will act as resistance. We want the EMA to start acting as support. This is where other buyers may find it attractive to buy the stock, okay? So as we continue looking through the chart, we start to see that basing out, just like I was describing, it's starting to base out. Now we start kind of getting it back over. At this point, as we're coming down, this blue EMA is acting as a resistance. It sells off, it gets overextended, it pulls back to the 9 EMA. It sells off, it gets extended, it pulls back all the way to the 50 EMA, gets extended, comes all the way down, pulls back to the 50 EMA, gets extended. But now look, now we're putting in like this double bottom, right? Which we know is a reversal. And at that point, when we start putting in a double bottom, then we start to make the move higher. And what happens? Now we're starting to use the EMA as support. We do break underneath, but this is at this point. At this point, now we start to bounce on top of the EMA again. Okay, so when you're taking your positions and looking for stuff, make sure that the EMA is in the direction of the stock that you're wanting to trade. Don't go long in a stock just because it's overextended and you believe that it's got to pull back to the EMA. It would be wiser of you to wait and be patient, especially if you're new and you're under the PDT rule. You only have a few day trades, so you might as well make it worth it. Be patient for the stock to start making higher highs above the EMAs before you start to take the trade. Especially in good stocks right now where the pandemic is continually selling the stocks down, like a lot of the airlines or a lot of the banks. Wait for yes, they're a good deal. Go ahead. We want to get in those. They're probably going to go up, but you don't want to be guessing the bottoms. We wait for the bottoms to be put in. We wait for time to catch up to price. And we wait for the EMAs to start to base out. We wait for higher highs in the stock, and then we can start to take the trades long. For example, as the stock starts finding it as a support and it starts bouncing. Now it gets overextended right here from the blue EMA to the pink EMA. So it pulls back, and now we find the same exact pattern on the EMAs where the blue EMA is now pointing up. Notice the distance between the EMAs on this pattern here, right, compared to the pattern we were just looking at. Notice how the EMAs look again. So imagine if we stuck to the same distance to the EMAs, the same higher low setup, the EMAs are underneath the stock before we go long, or if we're going short, the stock price is beneath the EMAs before taking it short. Focus on paying attention to the same exact patterns forming with the technicals on the chart and also correlating time with price and watching for the same patterns to form using the EMAs over and over, and you'll find the EMAs or other indicators to be attractive and to be useful to you. If you have any questions, be sure to leave a comment below. Also, let me know what EMA you like to use. Maybe you like to use a 13 or a 100. If you'd like to know more about the EMAs, the first link in the description box below will take you to our free Discord server. We have more content that goes a lot more in depth that we share with our private group. You can also follow us on Facebook, which is the second link in the description box below.